SCHD, an acronym that has been considered as a perfect synonym of high dividend income over the last couple of years. But today we'll discover if this ETF, which is one of the most popular funds in the entire world with about $50 billion of assets under its management, if it is currently worth the hype that it has. It is why, after going over the ETF itself, I'll be talking about the pros and the cons of holding it, and I will obviously talk about its past performance that it has been able to achieve compared to its main competitors. So let's get to it right now. This ETF that has been incepted on the market as of the 20th October 2011 is using a passively managed approach, which means that this fund is tracking a certain index without having any needs for a fund manager to make any big transactions in it. In the case of SCHD, it is tracking the famous Dow Jones US Dividend 100 Index, which is composed of high-yielding companies that are found within the US market that have an history of consistently paying some dividends. It means that the companies that are found within this ETF must have been able to continue to pay some dividends over the last couple of years consistently without stopping, meaning that even if we've faced a pandemic lately, they have still continued to pay some great dividends to their shareholders. And an important point about the companies found within SCHD is also the fact that they must have a great financial health as well. It is why among the largest holdings of this fund, you can find great companies such as Cisco, Broadcom, Amgen, Home Depot, Upvy, and Chevron. And so it is why the great variety of the companies found within SCHD are reflected in their sectoral distribution that is mainly separated between 5 big sectors, where you have the industrials that is leading the way, followed by the healthcare, the financials, the consumer staples, and the technology sector. And since the companies that are found within the Schwab US Dividend Equity ETF must be some financially strong companies that are able to continue to pay some dividends every single year, well, it means that about 70% of the total assets of this fund are from companies that have a market cap of over $70 billion, and about 23% of their assets are located in companies that have a market cap of between $15 to $70 billion. But now, as an investor, one of the most important things that you must know when you want to purchase different ETFs is to know what is going to be the cost that you'll pay every single year to own the fund. In the case of the Schwab US Dividend Equity ETF, you can expect to pay some super low management fees of about 0.06% per year or $6 per $10,000 invest. In return, by holding this fund over the last 10 years in your portfolio, your initial $10,000 would have grown to about $36,000 or an average return of about 11.50% per year. All of this while giving some great quarterly dividend distribution of about 3.50% per year. In the case of SCHD, to distribute these dividends, since the different companies in which they invest are not giving the dividends all at the same period, well, it means that the fund itself will hold the different dividend income payments that they receive and they will distribute it to their own shareholders of the fund every single quarter. Plus, with an excellent dividend payout ratio of less than 50% and some great dividend growth over the last couple of years of about 7.13%, it is fair to say that this ETF might continue to be able to grow their dividends over time as for the companies in which they are investing. However, when you want to invest in any kinds of investments, it is crucial for you to understand what is the level of risk that comes with it and what is the potential performance that comes with it as well. In the case of SCHD, we can see that according to Morningstar, for both a 5 years and 10 years period, well, this fund is able to achieve a lot more potential of return compared to the average peer of its category while achieving some lower level of risk. So as you can see, it is pretty much the best of both worlds. And so now let's see what are the different pros and cons of holding this ETF in your portfolio. First, when you talk about the great benefits that come by holding this ETF in your portfolio, it is impossible for you not to talk about the great past performance history that it has. In fact, as we've been able to see in this video, this fund has been able to outperform the same fund of its category as well as for the market over the last 5 and 10 years. And an important benefit of SCHD is notably the fact that it has never failed to produce some dividend growth over the last 12 years, something not even the best dividend aristocrats ETFs can claim. And in fact, as Albert Einstein once said, compound interest is the 8th wonder of the world. So this ETF definitely has a great case for itself. However, the big case that could exist against this ETF could come from a diversification point of view. In fact, despite being well diversified in terms of the sectoral distribution, as we've been able to see earlier, this fund only includes 100 companies, mainly from large cap companies that are located in the US market. This means that you don't have access to international markets and you don't have access to smaller companies that, despite having a little bit more risk, have more potential of return compared to larger companies. And the last con about SCHD that could be introduced by all the growth investors is the fact that it only invests in dividend companies, which means that you'll receive more dividend income and so that you'll be more taxed on this income compared to someone, for example, that will want to invest in the S&P 500, which will tend to give less dividend distribution. But in fact, the problem that you'll pay more taxes on your dividend income isn't really a big problem for any kind of dividend income investors. Nevertheless, personally, I believe that this kind of fund is perfect for anyone that wants to have a great complement in their portfolio if notably you have many growth stocks and ETFs. At the end of the day, it is one of the ETFs that I am personally buying every single month to slowly but surely construct my future retirement. But now, talking about retirement, if you want to find great ways that can help you to reach this stage as fast as possible, well, check out the video that's gonna be right over here and I will see you soon. Peace!